Hi, I'm Casey Shultz. I'm the Director of Investor Relations at the St. Paul and Minnesota Foundation. And today I am joined by the incomparable Danielle Steer.
Thank you.
Yes, she deserves a round of applause. Thank you. Danielle is the founding executive director at Lunar Startups. Lunar Startups specializes in growth, connection, and innovation for Black, Indigenous, people of color, LGBTQ+, women, and non-binary entrepreneurs. And Danielle is also the managing partner of Tundra Ventures, which we are going to learn more about in just a second. But real quick, just to set the table, because it's a little confusing. So I am at the St. Paul, Minnesota Foundation, but today we are going to be talking a lot about the F.R. Bigelow Foundation, and you're going to be like, what is going on? And the reason of that is because the F.R. Bigelow Foundation is one of the foundations that we support. The St. Paul, Minnesota Foundation is the largest community foundation in Minnesota. We manage about $2 billion in assets under management, and as part of that, we manage assets for other foundations, and provide services. So when we're talking about F.R. Bigelow, Frederick Russell Bigelow established the F.R. Bigelow Foundation through a trust in 1946. The F.R. Bigelow Foundation seeks to enhance the quality of life for all in the greater St. Paul area, fostering a vibrant East Metro region. So that's, when we're talking about the money that actually went into Tundra, it came from F.R. Bigelow. But I got to work on the deal, so it's very fun and confusing. But to kick off, Danielle, can you just tell us a little bit more about Tundra Venture?
Yeah, thank you so much for having me. Excited to see everyone here today and those that are joining online. So Tundra Ventures is an earliest stage venture fund that brings coached capital to what we like to call anti-fragile entrepreneurs. We're really looking at who are the great innovators that are bringing forward amazing solutions that are underserved across the community. So whether that's around the geography that they're coming from, the end users that they serve, or maybe their own identities. We're really thinking about who are the amazing innovators hiding in plain sight that we can invest in and help coach them to their Series A and beyond.
Now, Tundra Ventures is pretty new. You just launched a few months ago, which is super exciting.
Yes, LinkedIn told me 11 months.
Okay, that's few. Almost 12, almost 1 year. Now, and you are what many would call an emerging fund manager. This is the first fund that you've managed.
Yes.
Which is super exciting, and we're going to get into that also, how there aren't a lot of people who look like you as fund managers. Can you walk us through the inspiration for Tundra Ventures and the process for making it a reality?
Yeah, I think Tundra Ventures in part came about due to frustration. I think when we were launching Lunar Startups in 2018, we looked around and we saw that there are great innovators in our community, specifically who are underinvested. When you look at the stats, 1% of venture capital goes to entrepreneurs of color, 2% goes to women. That 2% who goes to women is mostly white women. When we look at geography, we live in an amazing state. We're literally the home of the supercomputer, the Honeycrisp apple, and the pacemaker. And only a small percentage of total venture capital dollars are actually invested here. And so we wanted to figure out how can we be a better conduit for capital. And we weren't seeing the needle move. I think 2021 was supposed to be a boom year for women and entrepreneurs of color in terms of venture capital. And that boom was a total of 0.3 and 0.4% of all VC dollars, respectively. So I don't know anyone else. That's not like a boom in my book. So really that's why we were like, all right, well, if it's not going to happen by other people's hands, maybe there's a place for us to come in and try and figure out how we can be supporting folks who have good intention, who might want to invest in the entrepreneurs that we believe in, but who might not have the networks or the resources or the access.
I love what you were talking about, how there's supposed to be this boom in underserved communities, and yet the world is made up of 50% women, yet less than 3% of venture capital dollars go to women-led companies.
Yeah.
In the US, I think we have about 23% of our population is Black. Less than 2% of venture capital, wait, what am I saying?
Venture capital, yeah.
Dollars, thank you. Venture capital dollars go to Black company founders.
And Latinx.
Those are combined.
They're aggregated, yes. We're not even disaggregating the data at that point.
So the math ain't mathin'.
Yeah.
Like, and I love what you say about with Lunar startups, that the talent is distributed, but capital is not.
Yeah.
So talk a little bit more about what you hope to see when you're successful with Tundra Ventures.
Absolutely. So I think we talk a lot about how there are several barriers to growth, regardless of what identity a founder might have. And that's social capital, inspiration capital, and financial capital. So it's like, who do you know? How are those people really activated to help you move your business forward? Are there people around you who can shine a light? I think we saw Bella earlier today who talked about, I cannot be what I cannot see. So making sure we have representation, in terms of founders that are getting access to capital and winning and succeeding. And then finally, literally the green to go. We know that, if you look at the stats, if you turn those stats on their head, it means that the majority of venture capital funds are competing for a pretty small amount of what would be the innovations that are being brought forward. And so we think that this is really blue sky territory in terms of there are a ton of great companies coming forward with fantastic solutions that are ripe for investment, and we're really excited to be a part of that. And I think that whether it's on the Lunar side, which is the early stage accelerator, and most of those folks are pre-capital ready, to be quite frank. Mm-hmm. They might not have the financial systems. They might not have the confidence. There's lots of soft skills, really, that are required, I think, for successful founders to bring forward great companies and to raise a lot of money. And so we try to work on that on the Lunar side. And then from Tundra's perspective, bringing that same, we call it coached capital again. We're not just writing a check and praying that someone is going to do a great job. We really try to work with our founders and be solid partners in the work that they're doing to be able to get them to that Series A. Because once we can get them to Series A, we know that we will see the needle moving a lot more significantly in terms of how people are able to, I think, scale actual decacorns, which, this community is ripe to create a few more of those.
And you're in such a unique position in your role as executive director at Lunar Startups. You work with these founders so closely.
Yeah.
And you've been doing this for several years. What was the spark that where you were like, I'm going to start a fund. Money isn't flowing to these communities. I'm going to go out, fundraise, and get this money to the communities.
Yes. The answer is technically wine, fries, and Shannon O'Leary, ultimately is what we could say. So in 2018, we launched again. We knew that financial capital was something that we needed to influence in some way in order to be a conduit for those entrepreneurs to get access. But we couldn't control who was writing checks or who was giving loans or lines of credit. And so I had this idea of like, well, someday in the future, we need to figure out what this looks like. And then Shannon O'Leary from St. Paul, Minnesota Foundation took me out for happy hour for fries and wine and said, I need you to go build a fund. And I said, can I do that? And she was like, yeah, I think you can. And if you do it, I'm willing to put you in front of a few people to potentially, if you can do it well, hopefully you can get an investment, but I'm willing to essentially use my social capital to help make that happen. And so that was kind of the start of a 2-year endeavor to now build what is Tundra.
Well, and you touch on something that's so important, and you said it before, I cannot be what I cannot see.
Yeah.
And as women, especially, we often seek permission. Like we're like, who's going to tell me that I can do this? And I don't think that's the case for who we've historically seen in venture capital.
Yeah.
So I love this story because it's a great example of a woman in power putting the ladder down, right? And
totally.
saying, here, climb up this ladder with me. Because, especially in finance where there isn't a lot of representation, women and minorities, background and indigenous people, it's important that those of us in power are removing barriers and making it easier to, or build a bigger table, as our session is called. But yeah, it's like that. Somebody who's like, you can do this.
Yeah. Well, and the irony is that not but a month before, I had told a group of advisors that I don't know what the solution is, but we need to be involved in this in some way. And they had all said, maybe you could do that. And I was like, oh. Yeah, you're right, I'm not an investor, I don't have the background, maybe it's not me. And then having Shannon say like, no, you could, you're just gonna have to work for it. it was the permission, I think, that I needed to go and figure out, okay, well, what's already happening, doing the landscape, doing the research, and building the competency to be able to launch Tundra with a great team.
And not to discredit what venture capitalists do, but it's not rocket science, right?
Yeah.
It's like, it comes down to curiosity, having a drive, and the grit to get in there, learn what it takes, and then following through on it.
Yeah.
Which you have.
The reality is, as venture capitalists, who can predict the future the best? And the fact is that no one can actually predict the future, but we can use data, we can use science, we can use intuition, we can make bets on people, which is ultimately what it is. It's high risk. And I think that historically, what has been valued are the types of skills and resources and types of people who have been valued in terms of, yes, we believe that person can make a good bet on the future, has been pretty limited, both in terms of background and experience and also what they care about. Because ultimately, VCs will, I think, invest more often in things that they care about or things that they know. And so it's important that we have VCs and decision makers who have a broader set of background and cultural experiences.
Absolutely. So you got permission, you had the skills to do it, you just needed somebody to give you the vote of confidence.
Yeah.
What was the biggest barrier to launching Tundra?
I think the fact that nobody on our team actually has a traditional investment background. Like, I literally have a degree in nonprofit management, and I know how to build really amazing interventions for entrepreneurs. We've got a lawyer, we've got an operator, we've got amazing skill sets on the team, but we didn't have our own angel portfolio. None of us are come from wealth ourselves. So when you look at the other people, again, that's inspiration capital of who have gone and built their own funds, they didn't look like us, and they didn't have our background, and they didn't have our experience. So I think that, I don't know that I would necessarily call it like imposter syndrome, but when we looked around, we didn't see others like us who could say, yeah, and here's how we did it differently. You get the LinkedIn targeted ads for going and getting like a mini investor MBA at Stanford or something like that. But we knew that the skill sets that we brought to the table of being able to identify great founders, to coach them, most importantly, and to be good stewards for other people's capital, which we've all been doing in various capacities, which is at the core of it. We're fiduciaries. I think is going to set us up for success in that way. And it just looks a little differently.
Now, you touched on the fact that you were lacking some skills. How did you build that competency?
So I think, as we think about who came to the table to really enable our success, so Shannon and St. Paul Minnesota Foundations, said, we'll put you in front of different groups, like once you get it going. We, at the same time, applied to Bush Foundation for a grant that would help us actually do capital development. And we used that grant to participate and do a ton of research. So we participated in, I think, 4 different programs, including the Backstage Capital program that they had for emerging managers. I participated in Recast. We're now part of Catalyze. There was just a ton of, I think, programs coming out of the woodwork that also saw a need for more representation across the VC space. They were wanting to kind of democratize what that experience looks like. So we sought it out. I think in 2020 and 2021, I did probably 75 informational interviews with other VCs in our community, with angel investors, with entrepreneurs, and other institutions to say, how would you build this? Or what would you do differently? Or what do you think is needed in the marketplace? It was just this kind of massive research undertaking that we did. And that's how we built a lot of it. And quite frankly, I give a lot of credit to the other VCs in our community who really welcomed us with open arms and said, well, here's how we do it. Here's our data room. This is how we do a deal memo. Bread and Butter Ventures, Matchstick, the list goes on, and Sophia Fund, they all sat down with us and said, well, here's what we would do differently, which is always a great way to start a conversation. And here's some things that we've learned along the way that we think would help you. And I would argue that Tundra really, in addition to having the philanthropic support, if we didn't have the VCs in our community being quite so welcoming, I don't think we would have gotten to where we are either at this point.
And how much was the grant from Bush Foundation?
$150,000. It was significant.
$150,000.
Yeah.
How instrumental was that to give you the resources you needed to build your competency to the...
Massive.
Because I know you said, didn't you say your MOC?
MOU, yeah.
What does MOC stand
Yeah.
for?
I don't know.
Modus of...
MOU?
MOU.
Memorandum of Understanding?
Yes. So glad you're here.
Yeah.
But
I'm the one with baby brain, Casey.
I know. I'm just sleep deprived because they're already born.
Yes, because you already have two.
But yeah, you said that costs like $20,000.
Yeah,
It's not cheap to start a fund.
Well, no, and when we got into this, it became more and more clear why there are so few people that are able to get into it easily. Because the legal costs alone, when we were asking around, like how much is it going to cost to launch a fund? It's $70,000 is the minimum, and that's if you have, not Cooley, essentially. So we were able to leverage that capital to be able to not only do the research and to pay for us to be participating in building the competency, but to also be exploring what are the literal resources that we need in order to be able to launch the fund. So the filing, the various filings that we have to do, the having a fund admin, there were just the list of things that were required for us to be good fiduciaries was really quite long, and we didn't anticipate that, and all of them required upfront costs for us. So being able to build that runway, and then when we found out, originally the hypothesis was that we wanted Lunar to have the fund inside of itself, and Lunar is a 501c3 nonprofit. And we discovered that there were a lot of pros and a lot of cons to having a nonprofit run a venture fund, and it ultimately didn't seem like, for where we believed that the venture fund could take it, that it was not of the highest and best use to do that. So we had to do a memorandum of understanding to then spin out, Bush originally gave Lunar the grant, to then spin out Tundra completely separately and decide how that was going to happen and what is the value exchange and what happens with the trademark. And there's all these other kinds of legal logistical things that I'm very glad I have a co-founder who's a lawyer who understood and anticipated a lot of that. But we, $20,000 on legal fees for Lunar to be able to protect its IP and make sure it gets to, I think, as an organization, benefit from Tundra launching in the long run. Who else can say that they had those kinds of resources to allocate to that? I didn't personally have those resources to invest in the legal myself. So without, having had that grant, it wouldn't have happened.
So you've already touched on about 24 barriers
Yeah.
that would have knocked out most other emerging fund managers. Yeah. How did you find, what was the drive, or where did you find the support to break through those barriers and keep going and actually launch this fund?
I think it was, we know how to build networks for entrepreneurs. And so we had to take a bit of our own medicine in that way and reach out and ask people for help. I think asking for help is a really good muscle that entrepreneurs have to learn how to use when they're building what they're doing. And we're a team of operators. We've all founded companies or entities previously, so we had developed those skills and literally just went and asked and said, hey, we're trying to do a thing. We don't know exactly what we're doing, or we have this question, how did you do it? And so when people heard our why and what we really wanted to accomplish, big picture wise, they were excited to get involved and excited to support us and are hopeful, that we're going to be successful in that. So I think it really came down to, putting a good community around us, but then also knowing that ultimately at the end of the day, our job is to collect no's, because that's just what's going to happen. But having the framework around it, of people saying no to us and saying great, we got another no, that's one step closer to another yes. Again, the experience that we've had building entities separately, in wins and failures, I think being able to bring that to this has been an important part of it.
And I think that's such a healthy way of thinking of it. You're I'm just going to get as many no's as I can to get to yes.
Yes.
Because that is selling, essentially.
Yeah. Well, and we live in the best community. So, people want to help. People want to support other people in doing good work. And so we've been able to benefit from that. And I think that is a huge aspect. When we first launched Tundra publicly, I made a LinkedIn post like, this was built by the community, and I truly believe that because so many people have had their hand in what we've been doing.
Now, we had a really good conversation around team building. And when you were thinking about what is the best team to launch Tundra, originally it was you and Amanda Heyman, and you had the foresight to say, I think we need help.
Yeah.
And tell me about that process.
Yeah, so Amanda and I had been working together for a couple of years. We knew that we jived well as like co-founders, and we also knew that we had limited identity, cultural experience, and backgrounds in terms of, even though you could look at us and on paper we look like two polar opposites, I think as like similarly educated white women, and also as a pair, we knew that both we wanted a tiebreaker, from like logistically building a company. We wanted a tiebreaker to be able to work with us and to kind of have a third leg to that stool. And we wanted someone who had experience as an operator and could like roll up their sleeves and was excited to kind of try new things and not have all the answers, and who vibed with us from a values perspective, but also brought different literal experience to the table, whether that was culturally, or from their own background perspective.
And then how did you find Adam to fulfill that role?
At the time, Adam was actually, when we were doing a lot of this initial research, Adam was part of Lunar Startups Cohort 3 with Yonder, which is a pediatric dentistry intervention. I'm terrible pitch, it's fine. And it was COVID. COVID happened. Dentists across the country slowed the sales cycle, basically like went stagnant for Yonder. And so he decided to sunset it for a few different reasons. And Adam had a great background coaching entrepreneurs, previously at Generator. He'd done some investments with them. We were asking him his opinion, and he just kept showing up and kept saying like, yeah, what can I do to support you? I'm really excited about what you all are doing. And then I think we just kind of voluntold him and said like, you're starting a fund with us, is more or less how the conversation went. Obviously, it was much more intense than that. You don't just go into a 10-year minimum relationship with somebody like that. But I think it kind of was this organic, he's the kind of guy that's willing to just do the work. And was super values aligned in terms of what we believe needs to shift in venture capital, and also just the massive potential that we have. So it made a lot of sense. And in our team meetings all the time, like we really talk about how we are a very balanced team. Amanda's like the legal cynic who thinks everything's like bad or someone's gonna try and cheat somebody, right? I'm kind of the eternal optimist who tries to be the pragmatic, and then Adam is the pragmatist, and so we really get to like balance each other out in those ways. And so when one person's really excited about something, the other two people can like say like, okay, well, like let's take a pragmatic look at it. Or when someone's feeling a little down about something, we can really, I think, work together to make evidence-based decisions that are so critical, for building a fund. And also just like great operators. I love working with competent people who just want to roll up their sleeves and dig into the work, but who value community and value the founders that we're trying to work with ultimately.
What has surprised you the most about raising a fund in Minnesota?
I think there's a few different things. I think one, people might be surprised to find that our LP base, or our investors, are actually pretty diverse. 75% are women, 30% are identified as people of color. And most of the time when folks are, I think, like making assumptions about white, Western, wealthy Minnesotans, it is white, and it is predominantly male. And we've worked really hard, I think, to build a community of folks that look a little bit more like our entrepreneurs that we're investing in than maybe other funds. So that's been a surprise and delight, and to be frank, feel like we've worked really hard to cultivate that too. We've just developed a new initiative where for every $1 million that comes in from an institution, we're able to open 9 seats up for folks that might not have the same liquidity, or they still have to be an accredited investor, but who might not have been able to participate otherwise. And that's important because from a VC math perspective, the SEC says that as a $10 million fund, we can only have 99 seats in the fund besides the GPs. So it's 100 total. Break that down, that's 100K. 100K is a lot of money. for most folks, even if you do meet the threshold for accredited investing. And we have seen historically that women and I think high net worth individuals of color might be in real estate or they might be in other asset classes, but VC is kind of a new asset class for that. So $100K to ask for someone for their first investment in the VC class is a big ask, right? So this is really allowing us to, I think, expand the table of who gets to participate in VC, because the returns are hypothetically so great, right? Again, high risk, high reward. But we're really excited that we're building like an advisory board and I think an LP base that, to use a very overused term here, there's this flywheel effect. We're investing in Minnesota, we're investing in the Midwest, and we want that money to stay and come here. If we invest in companies that are not in the Midwest, can we steal them? Can we convince them that this is a great place to build their businesses because we've got amazing talent and we can, cultivate them to come and convince them the burn rate's lower here, come here, survivability, rates are higher.
Number one survivability rate.
Number one survivability rate.
States in Minnesota.
Yes. I'm sure, like the 8 other things that Commissioner Grove, I'm sure, has to say about why this place is a great place to build a business.
That's where I get all my talk
Yeah, me too.
From.
It's great. But we love that for Minnesota, and we love that for this region, and I think that that's an exciting part of it.
Now, I love that you are actually being very conscious about not only investing in founders who historically have been underinvested in, but also making a mechanism for investors, because that is, we talk about barriers of entry, and that $100,000 minimum, most people I know could not shell out $100,000 into a venture capital fund. And so we do need to be creative and we need to be leaders in the field. And some of the ways that we can do that is by having some institutional investors come in with those larger checks, which leaves room for individuals to come in with the smaller checks. And I think the FR Bigelow Foundation is really proud to have been the first institutional investor to come in and commit $1 million. Now, I know when you and Shannon were first talking about creating a fund, and Shannon's like, you can do this, and she was rah-rah cheerleading you. Anytime you hit a snag, she's like, let me try to figure out who I can get you in front of to help you fix it. And I think all the time in the back of her mind, she's like, this fund is perfect for FR Bigelow Foundation. It's headquartered in St. Paul, focused on Black, Indigenous, women, people of color, founders, and helping address the income gap and the wealth gap that we're seeing, especially in Minnesota. But of course, all along the way, it was never a guarantee. It was always very clear to you that you had to meet the standards of our institutional investments. And I know we have some fund managers in here who have gone through our due diligence, and I'm sorry. It's incredibly thorough. And I know that I told you that, going into it, I was like, buckle up. Because once you go from raising with individuals and you try to break that institutional investment barrier, all of a sudden, the requirements are much higher. The combs are a lot finer that are sifting through all your documents. Tell me a little bit more about what was that experience like, especially as an emerging fund manager who hadn't gone through it before.
It was a lot. Kudos really goes to Adam, who led us through that process. But we received this due diligence questionnaire, or DDQ, and there was 50-something questions on it, and we looked at it and we were like, oh, okay, we don't know what half of these mean. And the reality is that most emerging managers don't get capital from institutions because the threshold is higher. But it's also because I think that there's a lower risk tolerance for most institutions, across the board. And usually when they're doing due diligence on funds, it's fund 2, it's fund 3. They have more significant experience. And so even the DDQ, I think, was representative of that. But we didn't see that necessarily as a barrier or a stopgap for us. We really saw it as, okay, we're building a product roadmap now. What can we do in Fund 1? What is really relevant? And the team at Avivar was amazing at answering a lot of our questions when we said, okay, is this one really critical for a fund one? Because we don't know how to do, or like a PPM or
and
something
just,
else.
So to make things even more confusing, we work with Avavar, which is a third-party due diligence company. They vet a lot of our investments
which
for us.
almost every institution works with a third-party, due diligence. So we were expecting that and really appreciated the experience to be able to build that product roadmap, because now we know what we have to hit for Fund 2. We know what metrics we're looking for. We know what we're targeting. We know what documents we had to put together. We knew what policies we needed to do. And we really just used that to build out our data room and to build out, I think, a much more sophisticated. It just wasn't this is our thesis, this is where we know we're going to find pipeline, and this is how, the people who've invested in us thus far, this is what they have to say about us. It was much more significant. I think we put originally something like 35 references on our reference sheet, and Aviva called every one, which I was shocked by, which is why an institution has more resources to be able to actually call that, right? And an angel investor is not going to call all 35 of your resources or your references.
Right.
So I think we love-hated the experience because it really was so helpful and really solidifying, I think, a foundation that we feel very confident to be standing upon when we go and talk to other institutions or even other LPs. But it was a slog for sure.
Well,
and what, 9 weeks, 10 weeks took us to go through? Yeah.
Well, and one of the things I really admired about working with the Tundra team was that when you would submit some stuff for due diligence and we're like, this isn't the level that you should be, that we would expect. I think Shannon was like, go talk to Ryan Brochur about deal memos or whatever.
Yeah.
And you were able to go, you guys took that feedback, went out in the community, and then worked with, you found the mentors in the community that you needed. They helped you, either they provided resources, which I was so shocked that so many funds in town are like, hey, here's our book, or like, here's our playbook that we use, or.
Which is like, I don't think that happens other places.
I don't think it does either. I was shocked when you said.
Literally, Brochur was like, oh, here's our deal memo. And I was like, really? Oh. Thank you.
Which is amazing, and that's what I love about Minnesota and the Twin Cities is like, I think people truly believe rising tides raise all boats here, and want everybody to succeed. So I was really impressed with all these stumbling blocks, because the learning curve is so steep once you get into institutional investing. And I think that's where it could be really daunting to people who don't have a background or don't have an uncle or a dad who have done this, who can walk them through it. And you have to go out and create your own mentorship community to get you through it. And you all did that beautifully.
Thank you. And I want to recognize that, I also think we had a lot of privilege coming into it because we were known entities in the community. People had, not only our identities, which come with their own, I think, amounts of relative privilege, but just the fact that we had been in the ecosystem, for a little while. I do think that mattered, and that was important for us, building trust with folks to say, we maybe haven't invested previously in the ways that other funds have, but here's how we have picked winners, right? And because we had a select 15 LPs that invested and believed in us early before we even had a data room or we had even talked to you all, we were able to warehouse 6 deals, I think, within 6 weeks at the beginning of this year, and to prove out no, this is how we're going to pick people, this is how we're going to find folks, and this is the direction that we're going. So we couldn't have done that without, I think, a lot of our advisors when we were like, hey, we want to make this investment. What do you think? Tell us about the science. Tell us about these other things. And it's helped us to build out, I think, a really robust due diligence process that we feel pretty confident is going to help us find some good winners.
Well, and I think the size of our community is amazing when it comes to getting resources and support, but it's a double-edged sword because being in a smaller community, when you're trying to fundraise a $10, $15 million fund, also has its own challenges. Do you want to talk a little bit about that? Yeah,
I think there have been a few different challenges that I could say, anticipated, but have maybe been surprising in other ways. So, we sit up here as Tundra. There's other great emerging funds that have been in the community. So Brown Venture Group, Groove, and I think that the assumption from some investors that we were going to be in competition with each other for pipeline, which we think is a great indicator that people don't quite understand how many great companies there are in this community to be investing in. I think that there could be 10 more Tundras coming out of Minnesota, and we would still not have like enough capital being allocated to entrepreneurs because there are so many great entrepreneurs here. So whether it was like stage of investment or thesis or how we support our companies, there were just a lot of assumptions about how we might be in competition with each other, when really I think there's a multiplier effect happening. Like, we're finding companies that those other funds are not, and they invest at different stages or in different industries that we wouldn't touch. So we do need to spread that out. I think ultimately, in some ways, yeah, if you only have $100,000 and you have 3 funds brand new that you're looking at, like you've got a tough choice to make here in the Twin Cities. But I think from a deal flow perspective, not concerned about us, from a competition perspective at all.
I mean, I agree with that. When I was the executive director of Beta, who puts on Twin City Startup Week, and we have a startup accelerator. And so I thought I knew everybody, saw it all. I am amazed at the companies that I see. I'm like, wait, I never even knew that one company existed. Like, they come out of the woodwork.
Yeah.
Where are all these companies?
Yeah.
It's amazing.
Yeah, and there's so many resources here, I think, and when you look at the maturity of our ecosystem today versus 7 years ago, I mean, we're talking 2 different ecosystems, right? And that's a lot of like hard work by individuals like ourselves and others in the audience over the past 7 years. But I think that it's a testament to this place is like, we're literally the home of the titans of industry. We know how to create innovators. We know what we're doing, from that perspective. And now we just need to be investing in the next generation of innovators and future titans of industry that don't just look like us, but like look like the community at large. And I think that's the opportunity that ultimately we have.
What is the best piece of advice you have for an aspiring startup founder or an aspiring venture capitalist?
I mean, like, finding one piece of advice is so tricky because, we're all, maybe the advice is look at your background and the aggregate of your life experiences and how they contribute to you being an asset. Because I think ultimately that's what it comes down to, is like how, you position yourself as a storyteller, your why, what's going to, on the lowest of low days, keep you going. Because once you're in, there's really not a whole lot of stepping out in some ways. I think being able to bring community around you on those tough days and being able to ask for help, I will never diminish the importance of being able to say, I need help. And it's a skill set that I think is not cultivated for a lot of communities, either culturally or like a society, to be able to say like, hey, I could use some help today. But that has been, I think, at the foundation of what we've been able to do by seeing ourselves as assets and what we bring to the table. Really, I think, like, refusing to buy into the imposter mentality, and to be able to say, like, hey, I do need some help, and not pretending, that we're just gonna go forward.
I know there's so much humility and vulnerability that goes into being an emerging fund manager.
Yeah.
And I think that a lot of us have, it is imposter syndrome. It's like, I have to present this front that I know everything, that I'm perfect, that I'm already an expert, when it's actually better when you say, I don't know what's going on, but this is the change I'm trying to initiate in the world and inspire people to support you, which it sounds like your team's doing great.
Well, I think that's why founders like working with us, because not dissimilar to founders, our investors are really investing in us. They're taking a bet on the 3 of us that we're going to be able to pick winners and that we're going to be able to support our portfolio companies into success. Just like a founder who's bringing a company forward and their first angel checks, right? It's about the founder. And I think that really isn't talked about quite enough, right? Yes, you have to have the right business plan, you have to have all the pieces in place, but people are investing in people, ultimately. And that's how we try to treat our portfolio companies, too. And that's what we're trying to cultivate, with the LPs we want to attract to us as well. We don't want to work with LPs that don't, I think, value that, ultimately. Right. And so, it helps to, I think, for us, in a lot of ways, to know who our people are and who our people aren't.
And I think Reed Robinson touched on that in his session earlier with Groove Capital. Like, it's just as important to be aligned with your investors and make sure you have the right investors as it is to be making those investments, right? Because you get the wrong people, and they're gonna actually be a detriment if they don't have the same values as you.
100%.
Local foundations had a significant role to play in Tundra VC getting off the ground.
Yeah, and still do. I think, we're pursuing investment with several other institutions in town. Again, every million that comes in, we'll be opening up 9 more seats. But also just in terms of the doors that they're opening, the introductions that you all are making, the introductions that other foundations, whether they have or haven't invested, have made for us. I think it's a massive role, whether it's social capital or literally financial capital.
How would you like to see foundations further support the entrepreneur community in Minnesota?
I think that there's a ton of ways, and there's a lot of people who've done great work on this that can be translated. So like Forge North and the work that Stephanie Rich did on how corporations can be participating, I think that there's a lot of lessons that can be learned there from a philanthropic perspective. Another reason that a lot of emerging managers don't get institutional capital is typically as a micro VC or anything that's under 50 million, the checks that they need to write are quite frankly too small for their endowments. And so a lot of them will say, oh, we love what you're doing, come to us at Fund 2 when you're above 50 million. And so I think that the willingness to write smaller checks, to maybe think about what criteria could be pushed or edged out that would make more space for, I think, folks like us to be at the table or other, NOMA, there's tons of new, I think, folks that are wanting to be, creating their own table or building the bigger table for what this looks like. So whether it's the criteria for what the returns look like, if it's more patient capital, there's a ton of different ways that I think philanthropy could be taking some of the lessons and just shifting some of the priorities and could still net great returns, whether that's on the social side or on the financial side. But ultimately, it's about looking at, okay, what are your base assumptions for what you think you have to do in order to be investing? And how do we maybe flip that on its head and try and reimagine how we could be allocating capital differently? So if that's in the form of $1 million instead of 10, great. If that's in the form of, patient capital or, market rate capital versus like the high rates that are typically in VC, great. You're going to open new pathways and doors for folks. Because I think, we're talking about VC, but VC is really ultimately like a very small, but like it's an asset class, a very small and high risk I think, vehicle. There's other alternative investment vehicles that are fantastic that we're not using, but other great funds like Connect Up and others are using that I think with more philanthropic institutions investing in, we could see massive changes for entrepreneurs here in the Twin Cities. So I think the call to action is to really assume that your investment thesis and I think like models right now are great, but they could do even more.
And that's exactly what the FR Bigelow Foundation did. In 2019, the investment committee spun off 10% of their main fund into this impact investment fund with the idea of, in addition to these grants, the millions of dollars that we issue in grants into the community every year, can we make a return on our investment pool that is also impacting the community in a positive way? So instead of having our dollars being invested in like a New York fund or a global fund, can we find local investments like a Tundra, an affordable housing unit, and keep the money local? And I've been surprised at how many great opportunities there are to be bringing in that smaller check size institutional funds to help these funds get off the ground. So it's doable.
And I think that like philanthropic institutions like St. Paul, Minnesota Foundations, and so many others are already trusted entities, so that your role in also helping other community members understand what they could do with their capital differently, like the ripple effect could be massive. But it really does take like that step of, I think, getting out there and saying like, okay, well, we're gonna do something that might hypothetically be risky for our endowment and like long-term, I think, capital. But again, like it's leadership by example, and the individuals in town are gonna start taking note and going, oh, well, maybe I could do that. maybe I could participate in that. Maybe, in addition to the DAF that I have with you all, I could be thinking about co-investing. And that's, I think, when we get to that place is when we're going to see, the needle moving a lot more significantly.
Absolutely. Do we have? I think we have 4 minutes for questions. Does anybody have any questions? I could keep talking, but there's a clock that tells me I need to wrap it up.
Any questions?
Any from the online audience?
Cool.
Great. Well, Danielle, thank you so much for your time. This was a lot of fun.
Thank you. Thank you for your belief, and I think for impact investing, as someone who has been an advocate and also its biggest critic, I think, for a long time, seeing the shifts that have happened in the past 7 years and the leadership that you all have had in that, and other institutions like Bush Foundation and others, I have a lot of hope for what can happen here in the Twin Cities and beyond. And it's not just about, I think, like patting ourselves on the back for doing like small changes, but really trying to lead by example for other communities. We're literally the epicenter and the home of America's social and racial awakening, and I think it is our duty to be thinking more critically about how we are actually moving the needle, because I don't know about any of you all, but 0.3% change is not enough. We are late, we need to be working harder on this, and I think that there's just so many great innovators here that deserve like recognition and validation and support and capital to be bringing their innovations to life. But it's not going to look like it's looked previously. And that's the hard part. But if everyone's willing to roll up their sleeves and actually do that hard work with us and with the broader community, I think that a lot can change in a short amount of time.
I totally agree. Thank you.
Thanks.